This is the Asia Trade. I'm Annabelle Droulers in Hong Kong.
I'm Haidi Stroud-Watts in Sydney. The top stories this hour. Asian stocks are set for a weaker open to begin a week of big tech and EV earnings. Traders are looking ahead also to Jackson Hole for fresh clues on central bank thinking. Kamala Harris kicks off a battleground state bus tour on the way to the Democratic convention, while Donald Trump plans a blitz of rallies and a border visit. Plus, we get the outlook for the theme park and tourist sectors in Japan with the Katana CEO Tsuyoshi Morioka.
Well, Heidi, the next 7 days might not be all about the US, but it's mostly about the US really over the coming week. We've got the Democratic National Convention that's kicking off in Chicago on Monday. And then you can add to that, of course, all these central bankers that are going to be gathering in Jackson Hole. And really, we want to be hearing about that message that Jay Powell is going to be delivering, because investors are already betting on Fed rate cuts. Are we going to get that signal being sent to the markets, not only on the magnitude of those cuts, but also it comes down to the timing of them as well?
Yeah, that's right. And we are seeing kind of this trend of global bond traders seeking some protection from the risk of inflation. Of course, we've had some pretty key developments broadly with central banks that have been embarking on the easing part of the cycle. Of course, a surprise from the RBNZ just a few days ago. But there still is quite a bit of concern out there as to, you know, what happens if we get this sort of stickier inflation rearing its ugly head again. We're seeing from the bond market sort of activity at the moment that these recession fears have really pushed these market gauges of inflation meaningfully lower, that the likes of Amundi, RLAM are buying hedges against future rises in prices as well. So just as bond traders are getting more assured that inflation is finally coming under control, we're now also seeing that a camp of investors are just quietly building up that protection. We're also seeing, given just a couple of weeks ago that we had major trading houses and investment houses really raising their risks of a US recession, we're now seeing some of that being clawed back. Goldman Sachs cutting the US recession risk to 20% for the next year. That's down from 25% after retail sales numbers, the very robust jobs data as well, right? So this is sort of tantamount on the August jobs report set for release on September 6th, saying that if that comes in reasonably good, we will probably cut our recession probability back to 15%, where it stood for almost a year before that recession at the start of August. So a lot of back and forth, Bell, when it comes to these eco expectations for the US.
Yeah, absolutely. Not just whipsaw trading, whipsaw expectations around the economy as well, but something that played into that on Friday was consumer expectations as well, picking up in the US for the first time in 5 months. So it's certainly that just changing optimism, and that prospect for a soft landing is once again coming back into view. That really set the stage for equities trading last week. Let's take a look at how futures are coming online this morning. And so far what we're seeing is that it could be a little bit mixed, mostly to the upside though. And again, that really tracks not only the optimism we had into last week, but Friday's session on Wall Street as well. Very strong numbers that came through. Of course, things can be tested, and you said about central bank decisions, that risk that inflation stays elevated. We still do have decisions that are due from the Bank of Korea, also in Thailand, Indonesia. But quick check on US futures as well, how those are looking so far in the session. And broadly, again, the picture here is equities continuing to point a little bit, Heidi, to the upside.
Yeah, and of course, as you said, not all about the US, but a lot about the US this week, right? Fed Chair Jerome Powell set to host the central bank's annual conference in Jackson Hole this week. Investors are hoping for further confirmation that policymakers remain on track for rate cuts this year. Let's discuss all of this with Alicia Garcia-Herrero, who's a professor at Hong Kong University of Science and Technology and a Bruegel Research Fellow. Alicia, always a pleasure to have you with us. And, you know, as we've been talking about, we're seeing so much back and forth when it comes to recession risk. It was just a couple of weeks ago that we had, you know, the heightening of recession risk with the major market sell-off, and now some of those views are being pulled back again. At the same time, you do have parts of the bond market now worried about the risk of stickier inflation coming back and kind of upending these easing narratives that we see, right? How do you view, I guess, the state of where we're at the moment with these central banks?
I think we need to look through all of this noise, from that Black Monday to today. It seems like we've gone back to where we were. But I think that idea of inflation driving the scene again, and the Fed kind of forgetting that it was about to cut so very many times from September is just wrong. And I'm happy to see that the Fed is kind of playing alone and being steady. Remember that 60% of the market was asking for an emergency cut only days ago. So the good thing, I think they're going to Jackson Hole with that confirmation that I think they will cut in September, and they will go on slowly but steadily, doing what they were supposed to do much earlier, but inflation didn't allow them. So I think we should just go through this and reach September and start seeing the Fed cutting, not too aggressively, because otherwise it would mean that indeed there would be a recession in the US, which is not our take. So that's it. Wait for September, slowly but steadily see cuts from the Fed.
Slowly but steadily, then perhaps we actually do get this kind of materialization of a soft landing. I do wonder, depending on what happens in November, of course, we've got the Democratic National Convention this week, but do you worry about the fiscal side of what happens, regardless of if there's a change in government or not, in terms of what those policies might do for the growth and inflation outlook?
Yes, surely. That's the biggest risk. It's a very good point. I think an excessive fiscal stimulus, which we have been seeing since COVID and never really taking it away from us, is the U.S. Most important risk. But I think for different reasons. Yeah, I mean, what Harris is going to do is probably to continue with this industrial policy, creating jobs for Americans. I think for Trump, it's more like he just doesn't care about the fiscal situation. So I think it's going to be much more aggressive. So there is a little bit of a difference, in my view, on the fiscal front. But in both cases, you're right. That's the most important risk for the U.S. economy, in my view.
And so then how closely do you think that central bankers in Asia, I'm thinking about rate decisions in Korea, Thailand, Indonesia, there's still Japan, of course, we're hearing from Ueda this week. How closely do they need to pay attention to those risks?
Well, I think we saw a little bit of what's going to happen with the Philippines. I think central banks in Asia will cut, but I don't think either the BOT, the Bank of Thailand, or the Bank of Korea will dare cut right now, because there's a lot of uncertainty about how much and whether that September will happen for the Fed. I think they're not as desperate to cut in front of before the Fed. So for me, there will be cuts, but they will be later in the year for both central banks. But the Bank of Japan is much more tricky because they need to hike, supposedly. And we know what might happen if they start playing around with that hike. A very steep appreciation of the yen, and possibly even a fall in the JGB yield, as we saw on that Black Monday. So they have to be very careful with pre-announcing any hike, which they have already downplayed, as you remember, right after that Black Monday. So for that reason, which is very different from BOK or BOT, I think the Bank of Japan will be cautious in hiking soon. They will wait a tiny bit. And make sure that the yen appreciation is not too rapid.
Yeah, that really is the biggest concern for them, especially when you've got that size of the yen carry that's largely unappreciated, or at least extremely difficult to track. When you're saying that they're going to need to be more patient, do you think then we can expect to see any sort of hiking from the BOJ, or any further hiking this year?
Well, if they guide the market, I mean, all of these short positions in yen that are being unwound, many are basically Japanese investors, and the BOJ knows how to deal with them. So I think it's a question of guiding that market. They can also play around with the announcement of 400 billion reduction in purchases of JGBs in a quarter, which is, what was guiding their whole, I wouldn't say quantitative tightening, because they're still buying, but they're buying less. But they can play around with that. And so I think they have quite a few tools still, because it's a very, very, intervene market. At the end of the day, this JGB market, even without yield curve control, is still very much a BOJ game. So in that regard, I think they should, in my view, wait until the end of the year, make sure that the short positions are managed, and then perhaps hike again. By the way, the Japanese economy doesn't need so many hikes anyway. They shouldn't be in a hurry to hike. They should be in a hurry to make sure that the reductions in JGB purchases are clear to the market, that the market knows what the BOJ is going to do. That's, for me, the most important thing, because the balance sheet is so humongous. It's going to take decades for them to reduce it. So,
speaking of balance sheet, actually, it makes me think of balance sheet recession in China and that risk or that debate that's happening once again. Is that the situation that China's looking at? How are you perceiving the economy right now?
Yeah. Well, I think there is an increasing number of voices in China worrying about balance sheet recession and more generally deflationary spiral. We had a little bit of better CPI data, but we know that producer prices are still negative, quite negative, and protractedly negative. So I think that kind of keen competition, excessive supply, closing markets overseas, and not only in the West, we see even Thailand, Turkey, many countries thinking of imposing import tariffs. So that's the risk. The risk is that China only knows how to produce and doesn't have anybody to buy what it produces. And yes, that's kind of hinting towards, I would say, balance sheet recession not yet there, but deflationary pressures clearly already there. And that's the major risk for the Chinese economy.
Alicia, it's great to have you with us. Alicia Garcia-Herrero, Professor at Hong Kong University of Science and Technology and Bruegel Research Fellow. Coming up on the Asia Trade, the company that brought the wizarding world of Harry Potter to life in Osaka is banking on 2 new theme parks to attract more tourists to Japan. Catch our conversation with the Katana CEO Tsuyoshi Morioka. Plus, we'll be talking market strategy further, Lombard, Odier and Goldman Sachs, as well as investors, of course, looking ahead to the Jackson Hole Symposium for clues on the next steps for global central banks. This is Bloomberg.
As president, I will be laser focused on creating opportunities for the middle class that advance their economic security, stability, and dignity. Together, we will build what I call an opportunity economy.
That was the US Vice President Kamala Harris speaking at a campaign event in North Carolina, and Harris has now embarked on a bus tour through Pennsylvania ahead of this week's Democratic convention, urging supporters to fight in the critical battleground state. For more, let's bring in Bloomberg Political News Director Jody Schneider, who's in Chicago for us. Jody, thanks very much for joining us this evening. And I think sort of big picture question has been, could or would Harris be able to maintain her momentum? Surely this is the week that it doesn't start to wane, though.
Yeah, you usually get a convention bump, as it's called, from, right after the convention. And she's had a few good weeks. It's not only, when you think about it, Haidi, she hasn't even been the nominee for a month yet. It was the 21st of July when President Biden announced he would not run for re-election. So it's been a remarkably short period and, full of a lot of enthusiasm. Democrats who really were, starting to think they were going to lose this because after that disastrous debate performance by the president in late June, now have reason to hope. This will be a week, though, where the vice president will have to define herself, will have to hone her message to voters who don't really maybe know her all that well. And she will do that in her speech Thursday night, but others will be doing that for her during this week. We'll hear from President Biden himself tomorrow night. He's coming in just for the speech. The First Lady will speak, then they leave. On night 2, it is former President Obama, the Clintons, and then on night 3, it is Tim Walz, her vice president, and then the main event, the vice president in her acceptance speech to the convention on Thursday evening.
She's urged her supporters to fight and fight the good fight, right? And it comes at a time that we know from various reporting that certainly the former President Trump's campaign was quite blindsided by the decision to replace President Biden. Are they on a steadier footing now? What do we know about the sort of renewed energy in the Trump camp this week?
Yeah, so the former president has publicly said that he thought he would be running against President Biden, and but has kind of in the last few days, this past week, really seemed to be running now against Vice President Harris. He will be counter-programming this week a great deal. That's not usually done as much in your rivals during your rivals convention, but he will be out there at rallies, press conferences, events, in swing states, in Pennsylvania, in North Carolina. He's really going to be hitting the trail this week. And this really shows the importance of Pennsylvania. The vice president was there today with her vice presidential running mate and their spouses, really trying to deliver the message. Pennsylvania is a must-win for her.
On Trump, we've sort of seen his messaging shift a little bit, or actually quite substantially, but in the last, say, 2 weeks, it's really been very emotional, the attacks, very personal. He's completely gone off message. Do you think we're going to see a shift once again? Because it definitely seems like his advisors just want him to talk about the economy.
Yeah, I mean, that is certainly with President Trump, former President Trump, he decides what he wants to say. And clearly, part of this is he likes the rallies. He likes the fact that the base gets energized when he attacks. He's also all about, the medium, and he loves television. He loves the cameras. He really loves the rallies. So that's a lot of what we've seen. He did try to shift somewhat last week. You saw that press conference with all the grocery items where he was talking about inflation. That was supposed to be an economic policy speech. Partly it was. But I think we will be seeing perhaps more policy from him. But he just loves the rally. He's a showman, and I don't think that's going to change. Certainly not anytime soon. And we'll have to see if he does that in the debates as well. He says he's all excited to debate the vice president, and we will see that on September 10th. They will have their first debate, and that's certainly going to be very telling, both reintroducing him to the public with a new rival in Kamala Harris.
Bloomberg Political News Director Jody Schneider, they're in Chicago for the Democratic National Convention kicking off this week. And we've also heard that groups of pro-Palestinian protesters have vowed to take to the streets of Chicago during DNC week, no doubt to make some headlines and to put increasing pressure on the administration and on the Democratic presidential nominee Kamala Harris, or assumed nominee Kamala Harris. It comes at a time as Israel and Hamas are now blaming each other for impeding a ceasefire and a hostage deal. This comes as the US Secretary of State Antony Blinken arrived in Tel Aviv to press for an agreement. Our Bloomberg editor Michael Heath joins us now. And Mike, no doubt we'll see these protesters. They want to put more pressure on the government. And we know that Kamala Harris has already taken perhaps a stronger view in terms of the sort of the humanitarian aspect of this conflict, right? Are we seeing that sort of sense of urgency come from the US and allies trying to push for this ceasefire, despite fundamentally looking like they're further from an agreement than perhaps ever?
There's no doubt about that, Heidi. I mean, this is the politics around this are fascinating. And on the weekend, it had looked like there'd been a little bit more progress. But at the end of the day, they both seem to be sticking to their sides. Now, we have to remember in the background that the Biden administration had sort of said that if Netanyahu doesn't make, a real effort here, they're prepared to call him out, that he's responsible for this. Hamas is already trying to push that. But underlying it all, for Israel, this is political. Can Prime Minister Netanyahu take the risk of his government falling apart, the right wing resigning if he does this deal? Or can he keep them in line and bring them through? Because it can be done, the deal, but it's just whether either side can do that. And in the US, they really want something, excuse me, they really want something organised there, because the other issue too is the potential for attacks on Israel from Iran and Hezbollah. And if these talks fall apart, all that comes back into play.
You mentioned the complicated domestic politics for Israel, right? They've said that they won't cease until Hamas is eradicated. Is Is it still about the hostages now? Because the eradication of Hamas seems, particularly when you're talking about regional proxies, almost impossible at this point.
Yeah, I mean, it is impossible to eradicate insurgents. That's right. And polls in Israel show that the public they want a deal because they want these hostages released. I mean, there's not many of them left alive. They've been through an incredible situation, as have obviously the Palestinian civilians. Just horrible situation there. So it is really sort of time in the sense that how much more can you destroy Gaza? I mean, it's leveled basically. So the pressure is there on Netanyahu, but you have to remember he has in the background legal issues, and if he loses office, he potentially faces that again. And it's the right wing that's keeping him in power, and the right wing is like, basically they're sort of, we keep fighting, and that's the only way that we'll release the hostages. They're not interested in a deal, and they're enjoying being in power. So it is a really, really difficult balancing act there. But certainly the US, gosh, they want a deal. They don't want to have the threat of a regional war if these talks collapse, particularly as the US enters, the final stages of its own election campaign.
That was our Bloomberg editor, Michael Heath there, and some other stories that we're tracking this morning. The International Atomic Energy Agency is warning that safety at a Russian-occupied nuclear power plant in southern Ukraine is deteriorating. That's after a drone strike hit the Zaporizhzhia plant over the weekend. IAEA warns they see an escalation of nuclear safety and security dangers in the area as Ukraine continues its incursion into Russia. Singapore's Prime Minister Lawrence Wong is warning of regional fallout from rising tensions between the US and China. Addressing the country in a National Day rally speech, Wong says the growing rivalry is Singapore's single biggest geopolitical concern. He also warned the country will likely be impacted given its reliance on trade. We'll have more ahead on the Asia trade. This is Bloomberg.
Take a look at one of the stocks that we're watching that is trading so far this morning on Monday in New Zealand. A2 Milk dropping in the Wellington session already. Net income missing estimates. A lot of this is really the China story in terms of just the weakness that we've seen across consumer demand and demand for A2 formula products in particular that miss on the estimates, with really the challenge that they continue to see when it comes to the China formula market there. And they're expecting that full year 2025 market value to continue to see that decline, that these challenges continue to be a concern. This is, of course, we saw retail sales kind of broadly holding steady, robust, maybe overdoing it. But of course, when it comes to broader markets, take a look at how futures are setting up. It is a big week. We're watching all things Fed related as we head into the Jackson Hole Economic Symposium, but also a batch of central bank decisions out in Asia this week as well. Bank of Thailand, Bank Indonesia, as well as Bank of Korea, all expected to hold. This is Bloomberg. The latest from the corporate front and headlines that we're watching. Elon Musk's social media platform X is closing its operations in Brazil while keeping the service available there. The move marks an escalation in its fight with a Brazilian Supreme Court judge who's cracking down on fake news and hate speech. X says the judge threatened its legal representative with arrest for refusing to shut down certain accounts. SK Telecom's AI chip unit, Sepion, has signed a merger agreement with rival semiconductor startup Rebellions. The companies say the combined business will have an enterprise value of $740 million. Rebellion CEO Sung-Yoon Park will lead the combined company's management, while SK Telecom will support its expansion as a strategic investor. Dimensional Fund Advisors says it's launching 3 actively managed ETFs on Australia's main stock market. The funds include value and small cap strategies, which complement 3 other ETFs already listed on the BOSS. Dimensional says it sees growing appetite from financial advisors looking for ETFs to build client portfolios. Belle.
Yeah, Heidi, and it's another busy week ahead for earnings here in Asia as we get more results from China's tech giants. Bloomberg Intelligence is expecting a sharp drop in Baidu's earnings. That's due to weak ag growth and rising AI costs. NetEase's adjusted profit could also sink amid regulatory constraints in China's gaming industry. On the other hand, we're focusing in on those automakers. We've got Xpeng, Geely, for instance. They're expected to report higher sales. Focus as well on Xiaomi, that's recently entered the EV race as well, despite intense competition that these car makers are facing and the threat of tariff hikes from the EU. For more, let's get more with our earnings reporter, Reina Sasaki, joining us this morning. And Reina, tell us, what are you expecting exactly from these results?
Yes, so Chinese EV makers, Geely, Xpeng, and the newcomers, Xiaomi, will be reporting this week ahead of the industry giants BYD, NIO, and Li Auto that are reporting next week. And Xpeng, which report on Tuesday, will likely show another net loss for its second quarter result. And then technology service revenue from Volkswagen remained the earning driver for the company. However, it was likely offset by the EV's weaker margins, weighed by the lower average selling price, which dropped about 10% on quarter amid the intensified price competition in China, despite the sales growth of about 38%, led by its SUV models. And Geely is, yes.
Nope, go on.
Yes. Geely will be reporting on Wednesday, and we are expecting its first half earnings to jump thanks to the improved product mix and higher exports. So its gasoline cars are actually gaining popularities overseas, which helps sustain the profitability for the company despite the weaker demand and weaker domestic demand in China. And we are paying closer attention to any announcement of price adjustment and new production plans in Europe in response to the provisional EU tariff enacted last month.
And in terms of focusing on the European market, we saw Xiaomi launching its new EV during the Paris Olympics, actually. It's been pretty popular in China. Are we starting to see results in terms of whether they'll hit those targets?
Yes, so Xiaomi, which is also reporting on Wednesday, will likely report its second quarter sales to surge almost 30%, partly thanks to its first EV models receiving higher than expected orders. And the company also benefited from the currency tailwinds. However, its launch weighed on the margins, so we're expecting that to show in the results.
And what else are you watching across the course of this week? Because there's a lot of different companies in the tech space.
Yes, so we are also expecting the result from the gaming industry in China. For example, NetEase, which probably saw lackluster results as the company works to deliver its next big video game title. And then Kuaishou also reached a plateau in its earnings growth as it faced increasingly intensified competition and slowing the growth in China's live streaming e-commerce.
Bloomberg earnings report of Reina Sasaki. They're certainly a very, very busy week we're setting up for. Coming up next, our conversation with the firm that brought the wizarding world of Harry Potter to life in Osaka. Katana CEO shares their plans for 2 new theme parks in Japan. This is Bloomberg.
We're just over 20 minutes to go until Tokyo trading starts here. This morning we've got futures looking a little bit mixed so far for equities there, but certainly we are looking possibly to recoup some of the losses since July of this year. But that rally last week was near the 9% mark. This morning we're setting up to look like we've got perhaps just a little bit of pressure coming through. The Asian trading might be a little bit weaker or low volatility as we await Jackson Hole as well, and the sort of messaging we hear from Jay Powell. But continuing to watch that Japanese yen, they're holding Haidi around the 148 mark.
We're watching the domestic political situation too, right, Belle, with former politicians now expressing interest in joining the race to lead Japan's ruling Liberal Democratic Party after Prime Minister Fumio Kishida announced his exit. Let's bring our East Asia government editor, John Herskovits, for more. So, John, how, in terms of the process, we've been looking at some of the contenders, right, and there seems to be more sort of names in the hat now. How do we expect this to play out?
The phase we're at right now are people who are trying in the LDP to get support so that they can go ahead with their candidacy. Tomorrow, the Election Commission is going to lay out some of the rules of what's going forward. So we're having the main contenders either saying that they intend to announce or they're planning news conferences or that they'll have something coming up in terms of a news conference after the Election Commission decides. One of the things is they have to meet a minimum threshold of support within the LDP to become a candidate. And we're looking at perhaps 10 people who may run. We could see 4 or 5 actually make their official declaration in the next few days. So right now, it's a lot of behind the scenes that's going on. Some of it's playing out in public. And we're going to be moving more from behind the scenes to garnering support within the LDP to the candidates, possible candidates coming forward and saying that they intend to run for the leadership of the ruling party.
How many people do you think there can be, pragmatically speaking? If you're saying there's going to be about 10 people putting up their hands, is that what we get to for the final contest to vote between or choose between?
I think what we may actually see is somewhere between 5 to 10, maybe, yeah. I don't think we'll have all 10 because it's difficult to get that amount for each of those candidates to meet the minimum threshold. And for the LDP to have such a large race, I think would be a little bit, it could be a little bit chaotic for them. So we may see 5 or 6 or maybe a few more than that who will actually run. And it's kind of a smaller field than previously, and it's a really wide open race. It's one of the most wide open races that the party has had since its founding a long time ago in the 1950s. So it's no front runner for this one. So it's quite an interesting race and how it's going to shape up.
What are we seeing for implications for policy? There's not many BOJ doves in these contenders, right? Do we expect perhaps that, you know, Taro Kono, who of course lost to Kishida, might make a resurgence, and maybe his sort of maverick, I guess, personality could be the renewal that the party's looking for?
Right. The digital minister, Kono Taro, who actually spoke to Bloomberg, made some comments about the yen being too weak and called for more tightening of the. He did some questions about the BOJ's decision to raise rates. He got a little bit of a rap on the knuckles for that. But with the LDP, this is a consensus-based party. So in terms of actual policies or a big move of the needle with the new prime minister, don't expect that. But we're going to see some changes around the fringes, some key pet policies of whoever emerges and becomes the prime minister moving forward. With Kishida, it was increasing of wages. So we may see one of those policies which we hadn't seen before being adopted by the next prime minister in advance. But overall, the party's center-right position, those policies are going to stay intact when the next leader comes around.
That was our East Asia government editor, John Herskovits, there. And let's shift now from the political realm to the entertainment one instead, because the company that brought the wizarding world of Harry Potter to life at Universal Studios Japan is banking on 2 new theme parks to attract more overseas visitors amid fluctuations in the yen. Our Asia Trade co-anchor Sherry Ahn visited one of those parks in Tokyo.
It's hot here in Tokyo. In fact, it's been a record-breaking summer. And Japanese people are finding some relief through indoor activities. This theme park, Immersive for Tokyo, has more than a dozen attractions, keeping locals and tourists entertained and away from the boiling heat. Theme parks, in fact, have had a major boom after the pandemic lockdowns, but recently, with rising inflation and dwindling Chinese spending, that's kept their businesses under pressure. With Japanese real wages turning positive for the first time in more than 2 years, we'll be watching whether consumers continue to open their wallets for these unique experiences.
Well, Sherry sat down with the man behind Immersive Fort Tokyo, Tsuyoshi Morioka of Japanese marketing firm Katana, and they talked about these latest parks, the outlook for Japan's entertainment sector, and the impact of inflation and currency fluctuations on consumer spending in Japan.
Live entertainment itself, especially theme park business, is representing most of the live entertainment business. It's growing. In the past 10 years, except for COVID-19 period, we are every year, in average, 8% growing. So people may say, the Japan population stagnant and consumption stagnant, the cheap yen, maybe consumption gonna be declining or plunging, Overall, maybe slightly consumption is declining, but entertainment is growing, that's a fact. And especially theme park business is growing very rapidly, and mainly driven by the Universal Studios Japan, growing from 2010, 11, they are growing.
Which of course you helped turn around that business. But you mentioned the cheap yen, which is of course why it's really attracting foreign visitors, right? But at the same time, I realized this theme park is mostly in Japanese, so how are you trying to capture that market?
Foreign visitors, maybe we are riding on the two waves. One, of course, cheap yen, but they are coming more. But the more like that, Japan as a brand, I think you may know the Davos Forum. Japan is always rated, the number one or one of the top of most attractive, tourism value we have as a tourism asset. We are very much strong. So lots of people want to visit Japan. That's one thing. So they are growing. And so in order to capture those waves, we as a marketer, we really would like to strike the moment that they want to make a decision. When they are considering visiting Japan or other countries, or then visit Japan, where to visit. That's basically 4 to 6 months in advance to their visit. So the period we are reaching to them when they are staying in a domestic country, we really want to touch and reach lots of digital communications.
I think one of the most appealing things, in fact, is the fact that this is indoors at a time when we're experiencing one of the most record-breaking summer heat. Is that helping your business? Yes,
I would say yes, because unexpectedly, especially this summer, it's more than heat. It's crazy, right? And those consumers feel risk to go outside. But air condition, whole day, very comfortable. That's compared to those outside big facilities. They're always concerned. Oh, is that okay? Too much heat? Oh, Immersive Fort Tokyo is indoor. It's advantageous for us, yes.
Junglia, though, it's going to be outdoors. It has lots of jungle experiences opening in Okinawa next year. The location seems to be pretty strategic. How much demand do you expect from Chinese travelers, Southeast Asian travelers, and just domestic tourists?
For the year one, the awareness of the park newly developed, taking a little bit more time, right? So I think year one would be majority comes from domestic tourists. That's our expectation. And but year two, year three, year four, beyond, those awareness is more penetrating to the outside of Japan, and the tourism will be choosing our park as a destination. So year one, I think it probably less than 10% or maybe 20%, inbound portion might be reality. But year three, year four, gradually increasing, and 4, 5, 10 years later, after the grand opening, probably half will be coming from outside of Japan. That's our prediction.
Is that also part of factoring in the prediction that the Chinese economy will get better in a few years?
Not necessarily. I'm not an optimistic person. Even having the some pessimistic assumption of the Chinese economy, because we cannot control, right? We always marketer has to plan for the conservatism. So we assume probably the kind of recession gonna be. But still, there are lots of people from Thailand and especially Taiwan and Singapore Vietnam, lots of Korea, lots of countries watching Japan as a destination, and Okinawa too.
Mostly because of a cheap yen as well. Do you have a yen assumption for the next few years?
Yeah, our yen assumption is built on when yen were 135 yen. Okay. So still conservative.
Conservative. Okay.
Yeah, and we have two more scenarios. If the yen becomes more than 110, stronger yen. Now the cheaper yen is 160 scenario. That was our, maybe not. Maybe it's impossible 160. But yesterday 160, right? So, but for example, that's good for us. 164. If we talk about Jangria itself, cheaper yen helps. But those are, who knows, right? So we think regardless yen price, but in the range, I think 50% should be inbound people should be contributing to the total annual attendance. That will be our scenario. In order to achieve that, we should be creating the value of the consumer in terms of experience and communicating what the value throughout lots of direct to consumers method. Do
external investors look at Janglia and say, we want to put more money as the yen gets weaker and become a little bit more cautious with the yen strength?
Good question. I think it's more, but our stakeholders quite sharing the same vision. This Janglia, they are strategic stakeholders thinking more like a longer term. So if they are not so much strolling because of the yen, I hope so. Key point I want to highlight is, just don't be deceived by just a number of population of a general, recession. But looking at the Japanese market, because of the attractiveness of the country brand itself, Japan. The other one is a lot of sleeping asset of IP. Japan has lots of Pokemon, number one brand in the world, stronger than Mickey Mouse. Okay, and the second one, Hello Kitty. It's number 2. Popular brand in the world, more popular than Mickey Mouse. Those are sleeping assets here, right? And Japanese entertainment industry is not about only domestic consumption. It's about pulling inbound so that growing 8% every year in past 10 years. So I think Japanese entertainment, especially theme park business, will be very much attractive in terms of investment opportunity. That's my opinion.
That was the Katana CEO with Sherry-Ann in Tokyo. And just as we recap as well, some breaking lines crossing the terminal. Core machine orders have just dropped, and some pretty mixed views or ideas coming through in this, because month on month we've seen the reading come in quite a bit better than what economists had been expecting. So growth of 2.1% on the month versus a survey for 0.9%, and a big pickup again because we had seen deceleration in the month prior, contraction of 3.2%. Year on year, though, it's not quite as positive. The picture actually, we're seeing a contraction of minus 1.7%. The survey had been for expansion of 1.1%, and certainly again the reading prior was a growth of 10.8%. So some mixed ideas coming through in that numbers, but again, really that big focus on the Japanese economy. Can it withstand further hikes? Are those needed as well? What we're seeing here for market setup, we are looking like the Nikkei is going to open under pressure. But you can catch Japan Ahead every Monday at 8:40 a.m. if you're watching in Tokyo. That's 7:40 p.m. Sunday in New York. And subscribers can watch live on the terminal using the TV Go function. This is Bloomberg. We're about 6 minutes away from the start of trade in Tokyo, Seoul and Sydney. And so far, the outlook is a little bit mixed so far. But some of the stocks or sectors we're going to be watching in particular, well, there's banking, of course, in Australia. Westpac's profit edged higher as pressure on margins ease and mortgage lending grows faster than the wider industry. So that's one to watch there. BlueScope as well in the commodity space reporting underlying profit for the full year that missed the average analyst estimate. Meanwhile, Suncorp forecasts an underlying insurance trading ratio for the full year at the high end of 10 to 12%. And of course, watching moves in BHP after workers accepted the company's latest wage proposal, putting an end to the strike, Heidi.
Take a look about how we're setting up. We're just getting into, of course, 5 minutes away from the start of major markets opening around Asia, including Australia, in that staggered start. We are expecting a little bit of softness as we head into the start of trading today. Some of those stocks to watch, of course, we're seeing that downward trading in A2 in the New Zealand session. We're also, of course, watching in terms of the thick of earnings season still dominating the narrative, looking at reaction from the likes of Westpac and Suncorp. As Bill mentioned a little bit earlier, we are expecting sort of an early loss of maybe about 0.1%. We are watching Nikkei futures down by just about 1%. And of course, very, very strong end to the week for Japan, just really recouping most of those losses that we've seen since the mega sell-off of that Monday. But generally a pretty cautious feel as we head into the trading week. Of course, it is Jackson Hole as well as a number of Asian central bank decisions this week as well.
Yeah, we've got the Bank of Korea, Indonesia, Thailand on tap. We've got an LPR decision from China. So there's a lot for investors to be watching. But really the direction for FX over the coming days does depend on the messaging that we get from Jay Powell at Jackson Hole. Do we get any further sense on the magnitude of the cut in September that's fully priced in at least 25 basis points right now? Could we see perhaps even more hikes also signalled by the Fed chair? But the market opens are next, as we said, Sydney, Seoul and Tokyo about to come online. We're back with that action. This is Bloomberg. This is the Asia trade, and we're counting down to Asia's major market opens. And Heidi, there's really a lot for investors to be thinking about this week. You've got big earnings on tap from China in particular. You've got key central bank decisions in this region, not least Bank of Korea. And you can add to that, of course, what's happening in the US, the Democratic Convention, plus Jackson Hole.
Yep, just a plethora of risks, right? But it was really the last one, the Jackson Hole Economic Symposium. This event will be perhaps more closely watched than ever in this year as we sort of expect to hear further narrative, further reformation of where that policy trajectory is headed from Fed Chair Powell and some of his colleagues. So all of this is weighing pretty heavily as we head into quite a cautious start to this trading week in Asia, Belle.
Yeah, you're certainly seeing that reflected so far in futures, at least for Japan. We'll see how that comes online. Just a little bit of downside pressure so far. But as you said, put it in perspective of what we had last week, which was a real comeback for the Nikkei of sorts, closing up nearly 9% higher. And again, we're starting to eye, could we start to recoup all of those losses going back to the end of July of this year? The direction for the Japan market this week, it's not just about what we hear from Jay Powell. We're also going to be hearing from Ueda on Friday. The BOJ governor is due in Parliament. He needs to explain that July rate hike decision, share his views on the BOJ's policy outlook, and think about what's happened in that time since the hike and that major yen carry unwind. Is that likely to unseat the BOJ, or at least give it pause for thought on whether we see further hikes in the course of 2024? Let's shift on. It's not just the focus of the BOJ. Other central bank decisions, as you said, in focus, the BOK chief among them. The decision this week, we could see that restrictive stance in place a little bit longer. There's been that bigger than expected rise in CPI. House prices in Seoul are booming. Again, you're seeing pretty flat trading, perhaps more muted figures until at least Jackson Hole, as we said, that key focus for us.
Yeah, take a look at how we're setting up as we get into that staggered open here in Australia. We are, of course, in the thick of earnings still, so watching a number of these names that have reported or are yet to report. A2 is already one that's moving in the Kiwi session, and again, it's on this broader sort of weakness in demand in the Chinese consumer story in terms of demand for A2 formula sales. They're expecting that weakness to really be pervasive in full year 2025. But take a look at the start of this session. We're seeing a little bit of softness there as we start the day here in Sydney. We're also watching the Aussie dollar holding pretty steady at 66.74, really looking like increasingly, if we see sort of more hawkish bias commentary from the RBA contrasted against its peers, particularly as the RBNZ kicked off its easing cycle sooner than expected, we could see the Aussie really kind of operating as a little bit of an outlier in that space. Watching treasuries as well, the end of the week was a pretty volatile week, but a strong ending with the whipsawing of eco data and sort of the coalescence of bets that the Fed will cut rates by a quarter point next month. We'll expect either coalescence or, of course, more volatility, depending on what we hear from Jackson Hole this week, Belle.
Yes, we said Jackson Hole, that is the primary focus for a lot of investors. Let's get more on that now and bring in Homin Lee, Senior Macro Strategist at Lombard Odier. And Homin, you get the sense that financial markets are going to be sensitive to every single word and probably the tone of what Powell says as well. What are you expecting him to say?
Well, it's almost impossible for him to avoid the topic of future rate cuts in light of the July employment report. So we do think he's going to drop a few hints about what the Fed intends to do, and perhaps a slightly more dovish signal. Maybe not enough to change the market pricing significantly, but at least open the door for some action to ensure that they do this risk management move in the upcoming meetings. So we think the speech is about the outlook anyway. So on Friday night. Now for the Asia markets, it's 10 p.m. Friday night. So it'll be mostly about the U.S. sessions and the impact on the following Monday. But overall, we think it's important for him to at least open the door. Whether or not he signals 50 basis point cut, we don't think that's likely. But that's going to be the key point that a lot of investors will be watching for sure.
Yeah, and what do you think then, if it's not 50, 25, I guess, is fully priced in right now, but it does seem that investors are continuing to shift their expectations around, is a soft landing even likely, or is it needed? And the US consumer sentiment was one that really stood out on Friday because you saw it picking up for the first time in 5 months. Where do you assess the economy right now in the US?
We don't think the U.S. economy is in a recession, and the consumer indicators show clearly that that's the case. I think the real goods, consumption spending is probably growing at 6% on an annualized basis if you judge that from the July numbers for the retail sales. So that's a pretty good backdrop for the economy. That's pretty dominated by the consumption, unlike the other more export-oriented economies in Asia. So with that kind of backdrop, even if you have a bit of softness in the industrial sector, we saw that in the industrial production number, for instance, and the FAD surveys recently, we think there are good enough elements in the consumption side for us to conclude that the U.S. economy is still generating positive growth, perhaps around 2% in the third quarter. And that's also the reason why we don't think, especially in conjunction with in light of the initial jobless claims numbers that have trended down a bit in past few weeks, the next employment report for August might not be as shocking as the July one. And that might be good enough for the Fed to actually simply consider 25 basis point cut in the September FOMC.
We've seen Japanese equities stage a pretty impressive recovery, and the narrative seems to be that there's still further gains given the sort of economic revival story that perhaps is just starting. You're neutral on Japan, but more constructive on South Korea, though. Can you explain sort of where that preference, how that preference comes to be?
I guess it really comes down to the policy view here. If you look at Japan, the underlying growth is improving quite significantly after the first quarter setback. And with the inflation still above target and wage growth still accelerating, we think there's a scope for the Bank of Japan to actually tighten policy one more time before the end of the year in December, which is a nice enough timing for the Bank of Japan to consider the impact of the U.S. Fed easing that's likely to start in September, as well as the U.S. election and potential guidance from Rengo regarding 2025 Shunto. So if that's the case, policy is still a bit tight, tighter in Japan's own context going forward. But for South Korea, we think the Bank of Korea will actually start cutting rates, taking cue from the Federal Reserve in the remaining months of the year. Might not be this month immediately, but as sure at some point in third quarter and early fourth quarter. And that's going to provide a bit of support for the local market going forward. And it's a market that's quite cheap compared to the other peers in the region and at the global level. So that's the reason why currently we're still a little more positive on South Korea compared to Japan.
The yen is back. The carry trade, not just the yen carry trade, all carry trade seems to be back now. These markets have very short memories, right? Do you think that we should be holding space for more bouts of volatility to come?
So as far as the technicalities around carry trade is concerned, especially for the yen, we think the carry trades, the short positions in yen have been more or less wiped out in early August. So it's more about whether or not the hedge funds and speculative money go for outright long on the yen, and that's more about the fundamentals. So for the carry trade, in the very near term, currency is two-horse carriage, so to speak. So it's not just about Japan's story, but also the U.S. story. And if you assume that there's no recession in the U.S., then there is a bit of scope for recalibration on the U.S. rate expectation. And that's going to put a bit of counterbalance against the BOJ tightening story for the dollar yen. So in the near term, we think there will be a bit of a range-bound environment. But in the medium term, you still deal with a very cheap currency and the narrowing interest rate differential versus the U.S. So we do think it makes sense for the yen to appreciate a bit against the dollar in 12 to 18 months.
What else we're, of course, focused on this week is the action in Chicago with the Democratic convention that's taking place. A few weeks ago, we were talking to a lot of different traders about the Trump trade. What's the Harris trade for Asia, and do you see it as being something that's positive, negative, or neutral?
Well, the Harris trade means basically for Asian currencies and assets, it's a positive backdrop because you're not going to get those disruptive tariffs from the U.S. government, for instance. And, because China potentially had to consider reacting to that event in 2025, if you can get rid of that risk and certainly support it for not only China, for the Asia currencies. So we certainly think that long on Asian currencies would be definitely part of the Harris trade. But also, because a lot of other policies will be less inflationary and disruptive for the Fed policy, you can basically count on the soft landing narrative to continue, and that's also supportive for the region's credit and equity markets. So overall, the region is quite nicely positioned for the Harris victory. We just need to get that result in November.
I mean, how do you view China at the moment, and do you look for any exposure? Do you really hedge against exposure to this sort of still very nascent recovery story?
So we are still comfortable to remain neutral on China. It is true that you could potentially get additional targeted fiscal and monetary easing before the end of the year because second quarter was pretty bad, and people were expecting that there will be a bit of rebound in the economy at the start of third quarter, but the pace of the recovery has been very disappointing, particularly because the real estate sector remains under significant pressure. So it's actually important for the policymakers to keep providing support, and we're watching the end of the month National People's Congress Standing Committee meeting quite closely because that's the body in charge of the official budget matters. But overall, the underlying momentum remains pretty weak. This has a lot to do with the policy framework that focuses on the supply side and also prioritizing renminbi stability over effective countercyclical policy. So in that regard, we are hopeful that the leadership delivers on the stimulus front. But the overall picture remains quite mixed, and that's the reason why we're still basically neutral on the economy and the markets.
Homin, always great to have you with us. Homin Lee, Senior Macro Strategist at Lombard Odier. A lot of caution there as we head into the start of this week. But take a look at some of the moves that we are watching. And of course, for Australia, it is really in the thick of trading updates and earnings season. Westpac is one that we're watching. Profit rising, margin pressure, though, also showing signs of easing as well. So just that profit level edging a little bit higher. Mortgage lending grew faster than across the wider industry. So it sort of offsets a broader macro outlook for the economy that looks a little bit more fragile. 1.8 billion Aussie is that unaudited net profit for Westpac in the 3 months through to June 30th. So a lot of these big financials and big banks contending with interest rate expectations that they will begin to fall by or before the end of this year. And we're seeing that curbing of spending from consumers and businesses alike as well. BlueScope Steel is one of the laggards. First half underlying EBIT coming at between 350 to 420 million Aussie there, and underlying sales they're of the same. But clearly there's some concern about sort of broader softness in the domestic construction and building sector. Housing approvals seeing a contraction. Some of the backlog from earlier periods also working through as well. It'll be very interesting to see how this stock performs when it comes to the US election, because this is one of the big movers with the Trump presidency in that early part of the Trump trade. Suncorp is another one that we're watching at the moment, with the underlying ITR at the high end of 10 to 12% there. So we did see sort of some of the premium sides of the insurance business seeing some good unit growth and price increases as well. Finally, BHP off by just about 0.2%. We're still sort of watching how this plays out, but BHP and these union leaders in Chile have reached a preliminary wage agreement as of Friday. So we're watching to see how that resumption of normal production at Escondida, the world's biggest copper mine, is going to play out, but prices have been falling. More ahead on the Asia trade. This is Bloomberg.
As president, I will be laser focused on creating opportunities for the middle class that advance their economic security, stability, and dignity. Together, we will build what I call an opportunity economy.
US Vice President Kamala Harris is speaking at a campaign event in North Carolina and, of course, embarking now on a bus tour through Pennsylvania ahead of this week's Democratic National Convention, urging supporters to fight in the critical battleground state. Let's bring in Bloomberg Political News Director Jody Schneider in Chicago. This is a big week, and, of course, we've talked about the post-convention bump that the nominees tend to have. What's at stake here for Kamala Harris in terms of being able to sustain the momentum that has virtually gotten her neck and neck when it comes to recent polls with Donald Trump?
Yeah, it is a huge week for her, Heidi. She basically has to really continue that momentum that she's really had. It's only been a month since the President Biden decided to leave the race, announced he was leaving the race, and she has begun to define herself. It's been a very good month. They've had a lot of fundraising. She's had a lot of momentum behind her, but now it's time that she has to kind of identify herself more, talk more on policy, really step out and say what she would do as president. It's a lot of energy here in Chicago. There's worries about protests. But there is still, a whole sense, almost a sense of relief that there's an enthusiasm now that there really wasn't with the worries after that performance in the debate by Joe Biden in late June. So it's a new day, but how long it will last is a real question. Candidates always get a post-convention bounce, so we expect that coming out of this convention if it goes well. But the real question is after that, when people start looking at her and her policies, how will she continue to do both in terms of fundraising and that momentum?
Yeah. How much do you think Kamala Harris needs to set herself apart from Joe Biden and his handling of the economy? Do you think that she can sort of create a new narrative, perhaps, that resonates? So far, we've sort of seen some populist policies and almost a competition between her and Trump, given they're sort of mimicking or copying each other to a degree.
Yeah, she really needs, Annabelle, to, to walk that fine line. She was part of this administration the past 4 years as vice president. She can't disown Joe Biden's economic policies, but at the same time, she wants to strike out on her own and to make it clear what she would do as president. And obviously, with inflation still something that voters are very concerned about, that and the border are their big concerns. She really has to, kind of refine that message, if you will. And she started to do that. We saw that last Thursday in her economic policy speech that she made at a campaign event in North Carolina, really focusing on the middle class, focusing on housing affordability. So we expect that that's what she'll do more of. But it is a fine line. And this, of course, that her speech Thursday night comes just before Jackson Hole, where we will hear from, Jay Powell and other economic policymakers on that. So it's a key moment for her, but there will be many key moments after this when it comes to refining that economic policy outlook and agenda.
How much does she also need to refine her foreign policy views, right? We know that she's taken a stronger stance when it comes to Palestine and the ongoing situation in Gaza. She says that we cannot be numb to the suffering and that how, Israel's right to defend itself materializes matters. Are we expecting protesters in Chicago this week, and how does that play into, I guess, the pressure for the Harris-Walz campaign to really reaffirm their stance on this?
Yeah, and that's going to be, Heidi, a very key issue for her, and it's going to be highlighted, as you note, this very week. They're expecting thousands of protesters pro-Palestinian protesters in Chicago. The police say they're ready for it, and we've heard from J.B. Pritzker, the governor, who said that he will make sure things don't get out of hand. But it is, it will certainly be highlighted. We will be seeing this on the screen. And she, again, can't run away from the message of the Biden administration, nor does she want to. She wants to stand by Israel and make that clear. But at the same time, she will have a more strident message when it comes to Gaza and the humanitarian crisis there. She's made it very clear that she wants a ceasefire right away as soon as that can happen. And those talks are going on right now. So this is going to be, this week, a lot could happen on this front, including right here in Chicago.
That was our Bloomberg political news director, Jody Schneider, in Chicago for us this week, and sticking with those tensions in the Middle East and the U.S. reaction to those, because Israel and Hamas are blaming each other for impeding a ceasefire and hostage deal. Prime Minister Benjamin Netanyahu has told his cabinet there are some things Israel cannot be flexible on. And Hamas released a statement detailing what it says are new Israeli demands that would prevent a deal. The standoff comes with U.S. Secretary of State Antony Blinken in Tel Aviv to press for an agreement. The International Atomic Energy Agency is warning that safety at a Russian-occupied nuclear power plant in southern Ukraine is deteriorating. That's after a drone strike hit the Zaporizhzhia plant over the weekend. IAEA warns they see an escalation of nuclear safety and security dangers in the area as Ukraine continues its incursion into Russia. We'll have more ahead on the Asia trade. This is Bloomberg.
Well, union leaders at BHP Group's Escondida operation in Chile say they will go back on strike if discrepancies in the draft version of a new labour contract aren't resolved. For more, let's bring in Bloomberg's Paul Allen, and perhaps that's why we're seeing a little bit of uncertainty in the share price here rather than outright relief that this preliminary agreement was agreed upon on Friday. There's some distrust here.
Yeah, we don't know what the discrepancies are. What we do know is the deadline for getting them resolved was 25 minutes ago. So development's imminent, one might say. So we'll wait and see. Typically, strikes at the Escondida mine aren't particularly long-lasting, but there are exceptions. Back in 2017, we had a strike that lasted for 44 days, and that ended up costing BHP $740 million. It contributed to a 1% decline in Chile's GDP. So it really illustrates the scale of the Escondida mine. It is the world's largest copper mine. It accounts for more than 5% of global supply, and global demand for copper is, of course, growing as well. So the union's got some leverage here, and they're obviously not afraid to wield it.
We talked about, the discrepancies that we're talking about. We're not quite sure about what benefits might be still in question here, but what had they, technically agreed to?
Yeah, what we do know, according to people familiar with the matter, is there's a $32,000 signing on bonus, a $2,000 soft loan. There are also agreements made around retirement benefits, health benefits, better education opportunities for employees and their children as well. We do know there was also a sticking point over a demand for the equivalent of 1% of shareholder dividends, which would be shared among workers. We don't know what the status of that is, or whether that is the discrepancy that's being argued about here. But yeah, this deal not quite done and dusted yet, so we'll wait and see what developments we get as the morning unfolds.
Bloomberg's Paul Allen there, and taking a quick check on how commodities are faring so far in the session to precious metal now. Gold is certainly a key focus for us today, given we saw it touching or hitting $2,500 an ounce for the first time ever on Friday. We did have a disappointing reading on the US housing market, so that really reinforced his expectations of faster and deeper cuts by the Fed. Of course, gold is typically a commodity that outperforms in a period or in an era of low rates. We are seeing it there, just moving a little bit higher. Also keeping an eye on what's happening with iron ore this morning. We are 1% to the upside. Oil, though, is a little bit under pressure so far. Brent crude just fractionally below that $80 a barrel level. Traders are certainly watching these US-led efforts to secure a ceasefire in the Middle East, that conflict between Israel and Iran-backed Hamas. And we know, of course, that the Secretary of State, Antony Blinken, is there to try and broker a ceasefire agreement. More ahead. This is Bloomberg. Taking a look at how markets are faring this morning, and it is pretty much flat as a tack so far. There's a lot for investors to be looking ahead to. You've got a host of BOJ, or rather central bank decisions in Asia this week. You do as well have the BOJ governor appearing before Parliament on Friday. There's earnings from China in particular to watch, and then also, of course, the Jackson Hole Symposium kicking off, plus the Democratic Convention in Chicago. So, Haidi, really a lot for investors to be tracking. And I was just taking a look at trading volumes, and we are a little bit off the 20-day moving average.
Yeah, when it comes to Japanese equities and Japanese assets broadly, it seems like all is forgiven, at least for now. The Nikkei seeing the best week since 2020. Despite that 9% rally, though, still has not fully recouped those losses since July 31st. So 39,101.82, if you want to be specific, as a level to watch in terms of making back all of those losses since the end of July. We're also seeing a little bit of a move when it comes to the yen in the early part of the Asian session. It's interesting, where has the volatility over the yen carry trade gone, right? In fact, a lot of those carry trades are now back, but still, watch the Bank of Japan still has the capability, according to Bloomberg Economics, to spook yen carry trades. That August 23rd parliamentary testimony from Governor Ueda will be key for those clues as well. Of course, we heard the Deputy Governor giving assurances that the BOJ won't raise rates when markets are unstable. They're looking pretty stable now if you take a look at volatility gauges. So taking a look at whether we can extend that biggest weekly advance for Japanese stocks in more than 4 years, continuing to, of course, try and claw back more of those losses. We also saw all-time highs last week for both inflows and outflows into Japanese equities. And our next guest says that the recent sell-off still has created some attractive entry points. Bruce Kirk is a Chief Japan Equity Strategist at Goldman Sachs. Bruce, great to have you with us. So You know, these markets have very short memories, though. But fundamentally, do you still see a compelling opportunity for Japanese equities? And if so, which sectors would you be looking at?
Okay, well, good morning, and thank you for having me on the show. It's certainly been an eventful summer for the Japanese equities market. You know, I think, as you were saying, when you step back and you look at the last 3 to 4 weeks, it's been absolutely remarkable. We've had this 24% peak to trough correction, and now we've had a 20% rebound. The earnings are actually very strong, but when you look at some of the post-earnings price action volatility measures, they've actually, you know, tripled to, you know, from where they were a decade ago. So, you know, I think what we have to do, and to answer your question, I think we have to separate the fundamentals from the technicals during the last 3-4 weeks. You know, our view is that the sheer brutality of the sell-off was really triggered a lot more by technical factors, such as sort of concentrated positioning coming up against very tight risk limits, than any fundamental shift in the validity of the buy Japan equities thesis. Now, yeah, I guess it's always darkest before dawn, and the price action at the bottom was certainly concerning. But, you know, a lot of our clients were looking beyond the near-term technicals and were eager to immediately re-engage at lower levels. Now, you know, I think they were viewing the correction as an opportunity to size up and come in at more attractive levels. You know, I would say the fundamental story around corporate governance reform remains very strong. The July-September quarter it's not usually a time when you have big shareholder return announcements, but this year, you know, we've seen cumulative buyback announcements from Japanese corporates. They're 75% higher than they were this time last year. And if you look at, say, the most recent TSE data from the week of the 5th to the 9th of August, which was the absolute peak of the volatility, you had Japanese corporates coming in and buying close to about $500 billion of stocks in the market. So there's a lot of dry powder out there, and it gives you a sense of the underlying support for the market.
When it comes to foreign flows at the moment, are they at levels where you would want to take a more defensive stance?
Yeah, look, I mean, we put out a note last weekend where we were arguing more towards a domestic demand tilt or a defensive tilt to the sector allocations. And the macro story around that, I think, is firming up quite nicely in that the Q2 GDP print of 3.1% was above consensus. The consumption story looks solid. Consumer spending is up 4% annualized. First positive in 5 quarters. You've got capex recovering. Last 2 weeks ago, we had the first real wage growth print in 27 months. So, you know, look, everything is on track, and that's the phrase that BOJ Governor Ueda used at last month's press conference. So, look, I mean, I think 2 or 3 months ago, we were having debates with clients about the stagnation risk for Japanese equities, for the Japanese economy. Now, I think the story is starting to look a lot more solid. So, you know, I think having more exposure to the domestic economy, I think makes sense going into year end.
You don't see the economy looking at all fragile if we have changing expectations around where the BOJ goes next. I mean, we're going to have Ueda in Parliament later this week, really having to defend that rate hike from last month, and also given his outlook for where we go with normalization.
Yeah, I think there's always the next data point to focus on in Japan. But I do think, you know, when you look at the recent economic data that's coming through, you have a solid story around the domestic economy, and that's something that, you know, has definitely been lacking over the last couple of quarters. Now, you know, we've obviously got, you know, I think, you know, the 2 factors that we were concerned about during the peak of the volatility. We were concerned that foreigners and individual investors might be scared to come back to the market, after the recent bout of volatility. That doesn't seem to be happening so far. And then the second one, which is what we saw from last week, we now have Mr. Kishida's decision not to stand for re-election for LDP leadership. So those are two sort of unknowns that we were definitely looking at a couple of weeks ago.
Yeah, the probability then of sort of a seasonal year-end rally then in Japan, how strong do you think that is in the context of the LDP leadership race, in the context of the US election, Jackson Hole with the Fed, the BOJ outlook? What do you think?
Yeah, we in the report we put out last week, we brought down our year-end target for topics by about 5%. Now, after the 20% rally that we've seen in topics, that looks to be quite a conservative assumption at this stage. But you've got a number of factors that are going to play out over the next 2 months that I think could provide a bit more volatility to the market. The LDP leadership election is one. The market so far has responded positively to Mr. Kishida's announcement not to stand for re-election. But if you go back to 2021, we saw something similar when Mr. Kishida's predecessor, former PM Suga, announced that he wasn't standing for re-election. We saw a run-up in the market, and then when Mr. Kishida was elected, we saw quite a sharp sell-off. We've also got the US election to think about as well. So, I think the chances and Fed's potential for Fed cuts as well, and the impact that could have in dollar yen. So I think there is definitely potential for the buy Japan thesis to be tested 1 or 2 times between now and year end, which is why we've gone a little bit cautious going into year end. But, we've kept our 12-month target for topics unchanged at 2,900.
That was Bruce Kirk, their chief Japan equity strategist at Goldman Sachs. And even if the buy Japan thesis could be tested, I think, Heidi, what's really not going to be tested is the visit Japan thesis, because certainly we're continuing to see really record numbers of visitor arrivals to the country. And now the firm that brought the wizarding world of Harry Potter to life at Universal Studios Japan is banking on 2 new theme parks to attract more overseas visitors. Bloomberg's Sherry Ahn visited one of those parks in Tokyo and sat down with Katana CEO Tsuyoshi Morioka. They discussed the outlook for the Japanese entertainment sector and the impact of rising prices on consumer spending.
Live entertainment itself, especially theme park business, it's representing most of the live entertainment business. It's growing. In the past 10 years, except for COVID-19 period, we are every year, in average, 8% growing. So people may say, the Japan population stagnant, and consumption stagnant, the cheap yen, maybe consumption gonna be declining or plunging. Overall, maybe slightly consumption is declining, but entertainment is growing. That's a fact, and especially theme park business is growing very rapidly, and mainly driven by the Universal Studios Japan, growing from 2010, 11. They are growing.
Which, of course, you helped turn around that business. But you mentioned the cheap yen, which is, of course, why it's really attracting foreign visitors, right? But at the same time, I realized this theme park is mostly in Japanese. So how are you trying to capture that market?
Foreign visitors, maybe we are riding on 2 waves. One, of course, cheap yen, but they are coming more. But more like that in Japan as a brand. I think, you may know Davos Forum. Japan is always rated, the number 1 or one of the top of most attractive, tourism value we have as a tourism asset. We are very much strong. So lots of people want to visit Japan. That's one thing. So they are growing. And so in order to capture those waves, we as a marketer, we really would like to strike at a moment that they want to make a decision. When they are considering visiting Japan or other countries, or then visit Japan, where to visit. That's basically 4 to 6 months in advance to their visit. So the period we are reaching to them when they are staying in a domestic country, we really want to touch and reach lots of digitals, communications.
I think one of the most appealing things, in fact, is the fact that this is indoors at a time when we're experiencing one of the most record-breaking summer heat. Is that helping your business?
Yes, I would say yes, because unexpectedly, especially this summer, it's more than heat. It's crazy, right? And those consumers feel risk to go outside, but air condition, whole day, very comfortable. That's compared to those, outside big facilities. They're always concerned. Oh, is that okay? Too much heat? Oh, immersive for Tokyo is indoor. It's advantageous for us. Yes.
Junglia, though, it's going to be outdoors. It has lots of jungle experiences opening in Okinawa next year. The location seems to be pretty strategic. How much demand do you expect from Chinese travelers, Southeast Asian travelers, and just domestic tourists?
For the year one, the awareness of the park newly developed, taking a little bit more time, right? So I think year one would be majority comes from domestic tourists. That's our expectation. And but year two, year three, year four, beyond, those awareness is more penetrating to the outside of Japan, and the tourism will be choosing our park as a destination. So year one, I think it's probably less than 10% or maybe 20%, inbound portion might be reality. But year three, year four gradually increasing, and 4, 5, 10 years later after the grand opening, probably half will be coming from outside of Japan. That's our prediction.
Is that also part of factoring in the prediction that the Chinese economy will get better in a few years?
Not necessarily. I'm not an optimistic person. Even having the, some pessimistic assumption of the Chinese economy, because we cannot control, right? We always, marketer has to plan for the conservatives. So we assume probably the kind of recession gonna be. But still, there are lots of people from Thailand and especially Taiwan and Singapore, Vietnam, lots of Korea, lots of countries watching Japan as a destination, and Okinawa too.
Katana CEO Tsuyoshi Morioka there with our Asia Trade co-anchor Sharian in Tokyo, talking all things Japanese theme parks. More ahead on the Asia Trade. This is Bloomberg. Singapore's new Prime Minister Lawrence Wong has used his first major policy speech to dish out a range of social benefits. Bloomberg reporter Avril Hong is in the Lion City for more. So, Avril, what are some of the new measures?
Yeah, ever since Lawrence Wong took over the reins from his predecessor, Lee Hsien Loong, in May, we've been waiting to see how he's going to kind of stamp his own brand on policy making. And he's used his first major policy speech to dish out social benefits. This includes paternity benefits, but notably as well, temporary financial aid for retrenched workers. This is particularly for the lower and middle income workers. And as he put it, we've seen what happens, he says, in other countries when the broad middle falls behind. The center, he says, does not hold. Societies begin to fracture and collapse. Now, this is worth noting because Singapore has for a long time been resisting jobless benefits, so to speak. And it's actually preferred to incentivize workers to stay in the workforce. So this, in some ways, is a widening of the social safety net. And of course, Lawrence Wong also pointed out that this is a major reset in the road ahead. And this is coming ahead of the election that needs to be called before November next year.
And he also spoke about what he calls Singapore's single biggest geopolitical concern.
Right, US-China tensions, and this is something that Singapore, as a small trade-reliant economy, has been grappling with for a while now. So not something that is entirely new, but he did say, yes, it is the single biggest geopolitical concern, as you mentioned. And he said that, there are potential vulnerabilities if we see continued readjustments in the supply chain. And one of the things that he did highlight was that regardless of who wins, the U.S. attitude towards China, that's something that's going to keep hardening, certainly something that a country like Singapore would have to continue keeping an eye on, guys.
All right, that was Avril Hong there in Singapore, and just across the way to Indonesia as well, also key focus there because we've got some new cabinet positions being announced, Heidi, in just under 2 hours from now, actually. So it follows the budget address. The changes that's coming through, it's really just coming weeks, of course, before Joko Widodo steps down, laying the groundwork for his policies to remain priorities for the incoming administration. But the key appointments we're watching for, there's new ministers of energy and then also investment and law. So certainly a level of continuity, perhaps, again, that was emphasised really in the budget.
Yeah, continuity, and I guess some of his critics would say this is sort of perhaps an indication of his unwillingness to really give up power, right, wanting to maintain that influence. So we'll be watching in particular. There's been a lot of speculation as to who might be appointed and, of course, their sort of allyship with Jacobi. And, of course, we're also looking at the sort of big winners and losers in terms of this most recent budget. Really, consumer and food names are expected to benefit. So those are some of the stops that we might watch when Indonesian trading comes online. Of course, we also do have the Bank Indonesia decision this week as well. They're not expected to make a move. The free meal program is expected to add some appeal when it comes to food producers. There's lower infrastructure spending. That could, on the other side of the spectrum, be seen as a weight on the construction sector. So a lot to pass through when it comes to this $230 billion US budget for next year. And policy continuity, you mentioned, is really kind of being assured in this handover between Prabowo and the outgoing president, Joko Widodo. So some of these priority programs for Prabowo that won him the election, as well as the current focus on green energy and commodity downstreaming really being maintained in this budget. More ahead on the Asia trade. This is Bloomberg.
Well, China's stock exchanges will stop releasing daily data on overseas fund flows starting Monday, depriving investors of a key sentiment indicator to track the $8.3 trillion market. Let's bring in our China correspondent, Min Min Lo. And Min Min, it certainly, optically at least, looks like this is sort of an attempt to conceal information given the pessimism surrounding Chinese equities. Is that accurate, or is there something else at play?
Yeah, well, there isn't any official reason that is cited for this move, but analysts think that, look, the data doesn't look very pretty. It's been quite volatile, and maybe the authorities just doesn't want to emphasize the data on capital outflows, because if you look at year-to-date data so far, the outflows turned negative on Friday, and if this trend continues, this would be the first year we could see an annual outflow in foreign investment into the Chinese stock market since 2016, when Bloomberg began collecting this data. And we had a hint of this new rule kicking in back in April. In May, the authorities had ended publishing the real-time live data of flows and had decided to only publish it at the end of the day, the net flows. And before that, the authorities had also asked the most actively managed mutual funds to stop publishing the estimates of the value of their products. And the intention is to prevent traders from engaging in speculative positioning and to focus more on the long-term indicators, long-term investment strategies. So this is kind of taking it in the same vein, just taking it a step further. But the big question is, will it actually increase investors' confidence? Because, as you said, it raises this question of transparency of the data in the stock market.
Yeah, and I guess it just removes yet another data point for traders to be considering. So what's kind of left now as an indicator?
Yeah, so what traders can look at is the PBOC's quarterly data on the financial assets held by overseas entities. But obviously, there is a lag to this data of at least a month. And it also captures the value of these assets through broader channels rather than the flows. Day to day, we still have the daily turnover, the number of trades and all that. But it doesn't really give us the direction of the flows.
Bloomberg's China correspondent Min Lo there with the latest. And I'm watching to see, if we see any kind of reaction when it comes to Greater China trading, given this is just really the latest in the removal of some of these gauges and ways that investors can sort of get that transparency over trading in Chinese assets. This is what we're watching when it comes to the start of trading across other markets around the region. S&P futures in particular looking pretty perky. Jackson Hole, of course, the economic symposium, the Fed speaker expecting is really front and centre, as well as these Asian central bank decisions. No moves expected from Bank Indonesia, from Bank of Thailand and from the Bank of Korea, although I will mention, though, we are seeing some strong gains now, Belle, when it comes to FX.
Yeah, that's right. Watching the Korean won in particular, actually, because we're at the highest now since April versus the dollar. But as you said, it's that focus on where we go next. We've got these expectations around Fed cuts very much being solidified. A BOK, also that decision coming up. We're expecting that hotter than expected inflation print could make it stay restrictive for a little bit longer. But that's it. More ahead.